Hi friends, I am Dinesh from Banking Solutions. Our today's episode is the best bank loan scheme in India with the lowest margin and highest subsidy. It is the PMEGP loan, Prime Minister's Employment Generation Program, a credit-linked subsidy program to generate new employment scheme, which is having the lowest margin and highest subsidy. I hope you have seen my last episode, how to become rich through bank loans and government subsidies, through which we have conveyed you the benefits of first PMEGP loan. Just the highlights I am sharing now also. It is divided into two, general and special. And the margin in general is 10%, special is 5%. Urban also, in the first loan it is divided into, subsidy is divided into urban and rural areas. Urban it is 15% for general, 25% for rural. For special category it is 25% and 35%. We will see the special category also. Women first, SC, scheduled caste, scheduled tribe, OBC, minorities, ex-servicemen, physically handicapped persons, all people from northeast region, hills and border areas. Now we are discussing about the second loan. Second loan of PMEGP. So we have availed the first loan of 25 lakhs for manufacturing and the second loan it comes. It is for upgrading the existing successful PMEGP unit. I am repeating, successful PMEGP units. Existing units which have performed well in terms of three parameters are there. One is in turnover, second profit making, third prompt repayment. This is the successful PMEGP unit criteria. First, again repeating, turnover, second profit making, third prompt repayment. So those units, successful units, they are eligible for, if it is manufacturing, 1 crore rupee, if it is for a service or trading, 25 lakhs. That is the second loan of PMEGP loan. There are some differences within the margin and the subsidy in the second loan. In the first loan it was 5% to 10% the margin. Then subsidy was ranging from 15% to 35%. Now it is in uniform in second loan. There is no specific difference between the general and the special. The margin percentage will be 10 to common to all, and the subsidy will be 15% to all. Only difference is 20% we are giving, Government of India is giving to northeastern regions and hill states. We are going to little details into this loan amount. If it is for a manufacturing, 1 crore rupees is the limit, 10 lakhs rupees your margin money, our own contribution, 90 lakhs will be the loan and 15 lakhs will be the subsidy. Our contribution is 10 lakhs only, whereas we are eligible for 15 lakhs subsidy. Service sector and trading sector, 25 lakhs maximum, 2 lakhs 50,000 rupees our own contribution, 22 lakhs 50,000 will be the bank loan, and against the 2 lakhs 50,000 of our contribution, 3 lakhs 75,000 rupees is the subsidy amount. We will see what are the objectives of the second loan. For the first loan we have availed for manufacturing, it is 25 lakhs. So we require, after 3 years, we require our expansion. For our expansion, additional finance is required. Additional finance is required mainly for our technology upgradation. Whatever technology we are using, we have to upgrade the technology. For the upgradation of the technology, that is the first objective. Second objective, we have to change the technology. We want new technology. And we want, instead of manual, we want automation and modernize our existing units. That also is available there. Then the third is enhance our productivity. Automatically when technology is developed, expansion, automation, everything is there, productivity will also be increased. due to the existing additional dosage of funds. Now this capacity is also increased. New machineries we have purchased, the capacity is increased. But there is very prime condition for this objective of this second loan is for additional employment generation. What is the procedure? As I informed in the first loan itself also. I hope everybody has seen our first episode. Again I am repeating. That is how to become rich through bank loans and government subsidies. We have elaborately discussed the PMEGP first loan. And like that also the second loan also we have to apply online. This is the link for it, and I am giving it this link in my description box also. You can copy and paste it for applying the loan. KVIC, KVIB, DAC, these are controlling agencies. After the preliminary scrutiny only. Earlier they were conducting this, selecting the application forms. Now there is only preliminary scrutiny will be there, and the application will be forwarded to the respective banks opted by the beneficiary. The choice is there. On receipt of the application, the concerned bank will appraise the loan as per their bank's policy and sanction the project. If intimation is given to controlling agencies, the sanction, they will be getting the margin money claim will be given by the bank, and subsidy will be kept in the fixed deposit. And like the earlier 36 months, this second loan scheme, it is only for 18 months. Fixed deposit will be kept, the amount will be kept separately for a period of only 18 months. And after the 18 months, the positive report by the implementing agencies like KVIC, KVIC and DAC, if they are giving that report that it can be credited to their loan account, the amount will be credited after a period of 18 months. This loan also, we are at liberty to give our own collateral for it if we have, and if you want a collateral free loans, that you have to, the beneficiary has to opt for CGT MSC, and you have to pay the requisite guarantee fee for availing this collateral free loan. Eligibility conditions we will see. The existing units financed under the PMEGP scheme, successful unit, whose margin money has been already adjusted into it and the amount has been repaid promptly, is eligible for the second loan. The unit should have been making a profit continuously for the last 3 years. That means right from the inception. Beneficiary has an option to apply for a second bank. If the first bank, the same bank, he can take very well, he can take the avail the second loan also. In any case, if a second bank is willing to extend the credit facility, the beneficiary can opt for the other bank. Registration of the Udyog Aadhar, because of the MSME concept is there, that registration is compulsory and is all beneficial for a unit. And the second loan, which I earlier informed, that is a condition also, and eligibility also it is there, that additional employment generation is required for the second loan. The utility of the above loan is 1 crore. If it is for a manufacturing, you can take up to a limit of 1 crore rupees. Then 1 crore rupees, that is divided into 60% and in a term loan and 40% in the working capital. For 60% we can invest in fixed assets. Out of the fixed asset, there is a condition that normally banks are not permitting to construct a building with the bank's funds. But in the scheme, second loan, there is a condition that 25% of amount can be utilized for construction of own building. That is available only in this second PMEGP loan. This is one of the very positive advantage of this loan. Now the rest amount we can purchase new machineries and you can the installation cost, everything you can have in the term loan account. That 40% left over, it can be utilized for a working capital, for a cash credit and a overdraft account. documents to be uploaded. When we are applying in the online, the following documents should be uploaded in the along with this application. The first and prime most is the sanction letter issued by the bank, respective bank, for the first PMEGP loan, that is for 25 lakhs rupees. Subsidy adjusted, that is, a record should be there, proof should be there. Either it will be a statement of account, or I think it will be, bank will be giving a letter that subsidy has already been adjusted, or KVIC will be giving a letter. Then bank certificate is required for the prompt repayment. Full and prompt repayment, bank will be issuing the certificate. Then project report. The earlier loan, the first loan, we have already prepared a project report for a project cost of 25 lakhs maximum, or 10 lakhs. Now the additional we are taking that 1 crore rupee more. For that one also we have to prepare a detailed project report. Income tax return. Then the unit is making profit right from the inception. So the income is generated. When income is generated, we have to pay the income tax. So the income tax return for the last 3 years we have to upload along with the application. Then normally if a loan, a manufacturing loan, if a 25 lakhs is there, limit is there, the turnover will be more than 40 lakhs rupees. If more than 40 lakhs rupees, the account should be audited by a chartered accountant. So along with the application, we have to upload the balance sheet and the profit and loss account for the last 3 years. And it should be certified by the chartered accountant. Now see the last, if taken the first loan we have taken for 25 lakhs rupees, and we have received 8,75,000 as subsidy. That is our total gain. I have given in detail the first chapter, first episode. The first loan gain is 13,09,000. Now we will discuss about the second loan of 1 crore. Out of 1 crore, 90 lakhs will be the loan, because 10 lakhs will be our margin money. If it is calculated for 12% at the rate for a period of 48 months, the EMI will come 2,37,000 and the interest portion will come 23,76,000 rupees. So bank is charging interest only on 75 lakhs rupees, and if we calculate on 75 lakhs 12% per 4 years, 48 months, the interest will come 19,80,000. The interest difference itself, it is our gain is 3,96,000 rupees. Then bank has to deposit the 15 lakhs in a fixed deposit. If the fixed deposit, the present rate, it is for 48 months, is rate from 5% to 6% maximum. We will calculate this 6%. Whereas the amount deducted from the loan amount is at the rate of 12%. So our gain is 6%. If we are gaining the 6% for 15 lakhs for 18 months, our gain is 1,40,000 rupees. Then see the 15% subsidy, that is 15 lakhs rupees. 15 lakhs, 10% margin we are taking and we are getting 15%. That means 5 lakhs more we are getting, we are gaining from this one, investment from the investment. The second loan gain is 20 lakhs 36,000. Total gain is, when we are availing a PMEGP loan of 25 lakhs first, then the 1 crore rupee, our gain is 33,45,000. What is our contribution? First loan we are contributing 1,25,000 rupees, 10 lakhs, our margin is 10, but the second loan it is 10 lakhs, total only 11,25,000, that is our monetary contribution. Then we are gaining 33,45,000. See our gain, where we will get this much gain. It is not from the business we are running. This is the interest gain and the subsidy. The total loan we are availing after 3 years, that is earlier 3 years, so the first loan 25 lakhs, then the second loan is 1 crore, total loan is 1 crore 25 lakhs rupees. Oh my God, this is the lifetime opportunity. This is the lifetime opportunity to become a very good entrepreneur, very good businessman, to become rich. Avail the opportunity at the earliest. If you could understand the PMEGP second loan, the best bank loan scheme in India. Please like this episode. If it is beneficial to your friends and relatives, share it. Of course, I have covered this subject within 10 to 20 minutes. You may be having lot of doubts. Each and every doubt, please comment on the comment box and we'll be happy to reply to it, to clarify the comments from our side. Our request, do not forget to subscribe this channel. While you are subscribing this channel, you see our upcoming episodes. Stand Up India, Startup India, Mudra Loan, Banks Direct Gold Loan, Housing Loan, Education Loan. See, we are giving you, our target is more than 100 episodes relating to banking and finance. So to get this all episodes regularly, we request you to subscribe to this channel. Thank you. Thank you very much.